Well, hey, everybody. Welcome. I appreciate you taking some time here to be on the show. And this particular episode started as a result of a Twitter conversation. And Meg, I'm going to let you start because it was your tweet that actually prompted a nice thread and resulted in us having this conversation here today. So what was it in the tweet that you sent out?
Yes, if I can back up just one step before actually placing the tweet, tweeting out the tweet was, I was listening to another episode of your podcast, Steve, which was Adam here, basically giving a primer on Bitcoin for all of us ignoramuses. And I was simply trying to learn more, and I really needed like Bitcoin 101. I am a financial advisor. I work with people in the tech industry. It is not unusual that people will start working with me and have some crypto holding of some sort. And of course, then, Bitcoin is very prominent, across the entire, country right now. And I just felt ignorant. Like I couldn't comment in any way intelligently on Bitcoin or crypto in general. So I had listened to this interview you had with Adam, and there was a discussion of this idea of volatility in Bitcoin, which anyone who's watched the price over the last month and a half is intimately familiar with. And I didn't understand how volatility could both be a good thing because it's good to have uncorrelated assets in a broadly diversified portfolio for long-term investing. How volatility could be good in that way, but that Bitcoin could also be used as a currency now. Because if you have something that can rise 500% in a month and drop 17% in a day, that's not a currency I want to use. So how can both of those uses coexist? And I just didn't understand that. And that is what I tweeted out. That is the question I tweeted out. And yeah.
Yeah, and then that really led us to have a few tweets back and forth, and Ronnie was involved, and Adam is involved because he and I were having the conversation on the podcast that sort of prompted it. So I think maybe a good place to start would be just to talk about what money is, and that may sound like a real basic question because we're all in the money business, we're all in the business of giving advice on money and what people do with their money. But I think that would be a good place to start, and I'm going to share, what I think and research that I've seen. I think there's actually different theories on what money is and different theories on how money evolved over time. But one way to think about money is that it's a technology. And what I mean by that is if I take my time and I create something or I deliver a service, so I'm using my time, I'm using my life energy, and someone else is going to find some value in that. And the way that they're going to show me that value is they're going to give me something that we call money, and I'm going to accept that. And that thing that they give me that we call money is, you could say, a technology that stores the time and the effort and the value that I created. And I will accept that money in the belief that I can then take this thing called money and I can use it sometime in the future and exchange it again for something else with someone else that is giving me some value. And so I think maybe at its elemental level, we can think of money as a technology. And let me just stop there. I mean, I could go on, but I don't know if Adam, maybe do you have any thoughts on how you think about money as well?
Well, the interesting thing, Steve, is the more that I think I have had to learn about Bitcoin and therefore cryptocurrency and DeFi and digital assets, the more I've had to go back and understand the meaning of money and understand and get educated on what it is, because especially for those of us in the developed world, it's kind of spoon fed to us, right? It's served up on a platter. And even in the investment world, a lot of what we see as advisors is so served up to us because the custodians have taken so much care of us to be able to say, here are all the things you can invest in, and we've made it really easy. We packaged it up really nicely, and you just have to, talk to clients and put their money in these accounts. So, in terms of talking about money and whether or not, and I guess what we'll get to is whether or not Bitcoin is money. Yeah, the idea of money, of course, is this technology, like you said. I do some sort of work, or I have some sort of product, or I grow something, or whatever it might be, and I have to have the ability to trade what I've done or what I have for something that you've done or that you have. And money is the means that we've decided on to be able to enforce those transactions, right? And that's the essence of money. Again, we've all taken it very much for granted because we all have it in our pockets and we have it on plastic and we have it denoted digitally at our banks. But in essence, it is a technology. And now what we see with cryptocurrency and Bitcoin is where else can that technology go? So I will just stop there. And then we can get on to, eventually probably talking about the idea of crypto and Bitcoin.
Yeah, and let me just share a few things in terms of the characteristics of money, because I think this is also important in trying to understand what Bitcoin is and where it fits in terms of the evolution of money. So as we think about what are the characteristics that make something a good form of money, one is its hardness or its soundness, which is simply, is there any limit on the amount of supply of this? Because if it's really easy for someone to create more of this money, and I'm kind of thinking like our fiat currencies now, where we can print 1 trillion and 2 trillion at the flip of a switch, so to speak. How hard is it? So that's typically we viewed as one characteristic of money. Another one is this idea of fungibility, which simply means how interchangeable is one. If I've got money and you've got money, how interchangeable, how consistent are they so that, one is exchangeable for the other. Another is portability, which is simply how easy is it to move my money from one place to another. Gold, for example, sure, it's portable, but it's also very heavy. So if I wanted to take $1 million of gold, it's pretty heavy if I wanted to carry that across a border somewhere. Durability, of course, is important. Is this thing going to rot? Is it going to corrode? Is it still going to be available 100 years from now without any type of deterioration? Divisibility, of course, we need to make sure that it can be, divided into a lot, different amounts so that it's easy to do something with. Security, of course, we want to make sure that it's not easy to counterfeit. So those are just a few of the characteristics that make something a good form of money. So Ronnie, any thoughts here, comments, questions as we think about what this concept of what we call money?
Only insofar as some of the things you just mentioned about durability and everything else like that are rooted in a pre-technological society. I don't know about you folks, but I haven't touched actual hard currency, cash or coins, in probably 2 years. Everything I do is digital at this point, with either plastic or transfers or Venmo or PayPal or something else like that. I just don't touch hard currency anymore. Or haven't. I haven't had the need to. I mean, I could go get some if I wanted to, but haven't had the need to because none of the transactions I've engaged in have required it. So some of those things, while they were absolutely true of the concept of money, so much is transferred to the digital world. Even not even talking about crypto at the moment. It's just your regular day-to-day transactions in a modern developed society now. Of course, those concepts are still very, very true in other countries and things like that aren't quite as far along on the technological curve as we are. But those are still true, certainly. It's just that I don't know how prevalent they are anymore as far as the concerns for them, the thoughts of the digital currency, whether you're still dealing with dollars in your bank account and regular credit cards, or whether you're dealing in a crypto wallet, the concerns of security and the fungibility, that is still certainly true, going between different types of currencies, between Bitcoin and the dollar and that kind of thing, being able to make those exchanges. But I don't concern myself anymore with the fact that my dollar bill is subject to being burned or anything like that, because I don't touch them anymore.
Mm-hmm. Meg, any thoughts from you on that?
Actually, where my mind was going would probably be completely orthogonal to this discussion, but from a behavioral, I work with individual humans. And so a lot of what I think about with my work with humans is their behavior. And I think there have been many studies that show that if you are paying with things with paper money, you are way more aware of your behavior with money. And the more it's moved into a digitized world, just credit cards are the classic example. You spend more. because there's not nearly as much friction. And so, I wonder what a crypto-based world would do in terms of human behavior around money.
Yeah, and let me throw this out. And this really gets into Austrian economics, which I am a neophyte when it comes to Austrian economics. But one thing that a lot of people seem to talk about that are Austrian economists is this idea of inflation versus deflation or disinflation. And some people would argue that when you have a fiat currency, so Meg, when you talk about behavior, if we've got money, we're probably going to spend it. Well, some people would say that the reason why we do that is because if we have inflation, we have no incentive to save our money today, because if we save our money today, it's going to be worth less in the future. And so we have this incentive to actually spend our money today. Whereas they look at something like Bitcoin, which has its hard cap of 21 million Bitcoin that will ever be produced, that it's essentially a deflationary or disinflationary type of monetary technology system that encourages people to actually save. Because if the value of Bitcoin is going to go up over time, because there's just a cap of 21 million, then that encourages people to actually save their Bitcoin and not spend it. And you see that a lot when people that are really hardcore Bitcoiners, they talk about Bitcoin as a savings technology, that is something that incents you to save your money because of that hard cap. So Adam, any thoughts on that? I know you know a lot about that as well.
Right, and we've talked a lot and we've done some videos and such about the idea of Bitcoin as a store of value or Bitcoin as an inflation hedge, which is where we've seen some of the folks use it. Paul Tudor Jones was one of the first that came out and said, I'm using this as an inflation hedge. I can use gold, but I think Bitcoin's a little bit better. And he outlined his reasons to the point that, guys like Jim Cramer have said something similar. Michael Saylor started, of course, with MicroStrategy, and now he's gone so much farther with buying Bitcoin that it's almost gotten comical. But then others have looked at Bitcoin and said, we see inflation in the future. We see the fact that there are more dollars being printed, not just dollars, there's more euros, there's more currency all over the world being created. And it was to solve a problem, right? We had COVID and we had people shutting down their businesses, and therefore we had to give them money to get by. And we had to create that money out of thin air, whether or not we thought it was a good idea for the long term, it's a good idea for the short term. And those folks have looked and said, in the future, we think our expenses will be higher in dollar terms. We think we'll have to pay more for the same things in the future than we do today. And so therefore, saving our money in dollars in the bank doesn't make sense to us, because that means that we're gonna have to spend more of those dollars later. Can we save those dollars in something that has a hard cap, that that we know the supply of, and that supply can't change, and therefore the value of that thing should be higher in the future as well. And so in the future, when we got to pay our bills, we sell whatever that thing is, whether it's gold or Bitcoin, for more dollars, and we use those dollars to pay our expenses and to pay our bills. And that's kind of what they've seen. And they've chosen, those people have chosen Bitcoin as that store of value. And they've looked at it and said, look, it has some of the characteristics like gold. It has a relatively fixed supply. Steve, we've talked about stock to flow models and such. We know how much Bitcoin is being created every year. And they've said, we'd rather do this in Bitcoin because it's just easier. It's easier to deal with a digital wallet than it is to store a bunch of gold. Right now, what you look at, and look, I say all this, and I said all this, within that Twitter thread that we had going on. My job and our job is not to convince you that you need to go invest in Bitcoin, nor is it to convince you to go convince your clients to invest in Bitcoin. Because the worst thing you could do is really talk them into Bitcoin. And, as you alluded to, Meg, it drops that 18% in a day. And now you got to answer to that client who finally you talked into Bitcoin, and now they've lost 18% of their investment in a day, and they're not going to like you very much anymore. And they're going to run over to Ronnie now, because Ronnie is the one who said, I don't think you should be in Bitcoin at all, right? So the goal here is to get you to understand it a bit, understand what the investment theses are, and you decide as an advisor, does this make sense for me? And does it make sense for my client? Do I see a value here? It's not necessarily, we like talking about the Austrian economics sometimes and the inflationary purposes, but the idea is, do your clients want it? Are they interested in it? And if so, is it worth it for you to learn more about it and how it works? And from there, does it make sense enough for you to go, you know what, I see why people are investing in this. And therefore, for my clients, from a risk perspective, it's okay. Here's why you might want to do it. We just want to have a plan around it, right? And I apologize for kind of taking that direction, but the argument is not you need to invest in Bitcoin. It's you kind of need to understand it because your clients are interested in it. And that's kind of our job as financial advisors and fiduciaries. And from there, you get to decide. But, I appreciate what you all are doing, Ronnie and Meg, of saying, we don't know enough at this point to really make a decision either way. So we're going to go learn about it versus stomping your feet and going, this is newfangled technology and I don't, it's tulips and I don't believe in it. And therefore none of my clients should be in it.
I think for me, one of the things that my brain is sort of just stumbling over, can't get past, is there's a lot of discussion about using it as an investment, and that the word investment is always preceded by the word speculative. And I think I have an easier time wrapping my head around how I would even think about using it in my role as a financial advisor to my clients. Because there are lots of things out there. I mean, my clients go through IPOs and then 90% of their wealth is wrapped up in one stock. That's also speculative. And so I sort of intellectually, I feel as if I can understand that view on Bitcoin or crypto in general more easily. But it also seems to be sort of intermingled with this. And then it's this, Bitcoin is this revolution for humanity and for culture in general. And I'm like, that is above my pay grade, right? Can I just stop at is it a speculative investment worth putting into my client's portfolio or not? Or do I have to understand, you start tweeting any questions about Bitcoin and eventually, holy smokes, people that I've never heard of in my life start invading, and they're all respectful, but they all start talking what I consider to be gibberish and these sort of highfalutin proclamations about the power of Bitcoin. I'm like, oh, no. Just like, I need to know how to talk about it with my clients as something that they should or should not have in their financial lives.
Right. And Meg, I'll address that real quickly because I understand what you're talking about. All of a sudden you say Bitcoin and all the Austrian economists dump in and all the people who invested in Bitcoin in 2012 and have been talking about it, get to chime in and talk about how smart and great they are. But what it really comes down to is if you understand there's a fixed supply of it and all those other arguments for it, all the other revolutionary arguments, and does that create more demand? In your mind, does that eventually create more demand for Bitcoin? If there's more demand for it and the supply is limited, then by definition, it should go up in value. And so when you're talking about it, when you start thinking about, is this something for my clients from a speculative investment perspective, you might go, yeah, I see where it can go up in value. And now it's my job to figure out how to make it safe for them. How do I make it a safe investment? Meaning, how do I make sure that they don't get scammed and that they don't lose their, that I understand private keys and custody and how can I make money and do so in a compliant manner? But the initial part is, do I understand that it has a fixed supply? And then do I understand these arguments that say there's going to be more demand in the future with a fixed supply, therefore the value should go up? Or I don't think there will be a demand because I think it's going to be outlawed in 28% of the countries, which encompasses 85% of the world's wealth. And therefore I think it will go down in value and I'm going to advise my clients against it. Like that's really the argument to have. Everything else gets way down the rabbit hole of economics and such, to the point that you wouldn't discuss those things with individual stocks with your clients or individual funds with your clients. You'd go, I think it's going to go up, or I think it fits your portfolio, it fits your risk profile, right? So you just really have to get to the point of, do I understand the supply? Do I understand what potentially drives the demand? I'm not looking for my clients to get invested in a revolution, right? We don't fund revolutions very often, so I'm not interested in that. Do I see where there is potential for this to go up in value? Does it make sense for certain clients of mine that have that risk profile? And then, if so, how do I go about having those conversations and making it safe for them, right? Because that's really your job as an advisor, right? Making sure that it's safe and being able to have the conversations of, yeah, it went up 82% in the last 3 months. It's down 18% today. What are we going to do? What's the plan? And if the plan is, no, we're holding this for 3 years, then okay, the plan is we're holding it for 3 years, come hell or high water, right? Or zero, whatever that is. Does that help? Does that make sense?
Couple. Go ahead.
Yes, it makes sense. It draws a very clear line between considering Bitcoin as an investment and considering Bitcoin as a huge revolution in how humans live. And because I'm super uncomfortable addressing the revolution side of that line, but I am more comfortable discussing the investment side of that line.
And Meg, I think one of the responses to your original tweet, I talked about how basically Bitcoin is different things to different people. And essentially what I meant by that was, as Adam is alluding to here, you can really go down the rabbit hole of Bitcoin. You can think of it in terms of a transformational technology. You can think about it, as Tyrone Ross says, digital social justice. There's a lot of different things that Bitcoin can do for people depending on what your purpose is. If you're a financial advisor, you may only be interested in, is this an investment that I think is secure enough that I can find ways to minimize the potential risk that can possibly go up in value. It may have asymmetric risks. The upside might be 5, 10, 20x, and maybe I can protect some of the downside. So if that's how you want to view it, that's totally fine. But for other people in other countries, they may view it a different way. They may not be looking at it as investment. They may be looking at it as a way to store their life savings that can't be confiscated from a corrupt government, or they may be a refugee that's trying to slip across the border and all they can take with them is what they can carry on their back. But if they've got their seed phrase for their Bitcoin and they've got their wealth stored in their Bitcoin, they can take that with them and no one can take it away. So it can be different things to different people, but certainly for this conversation related to financial professionals, I think the focus is really going to be on, is this an investment that makes sense? Is it mature enough that we can do that? So Ronnie, I know you've got some thoughts you want here as well.
Well, part of what got this started is Meg and I's education. And there are a couple of concepts that have been back and forth that I'd like to push back on a little bit as part of that educational process. The concept of a fixed supply. Bitcoin particularly, we'll stick with Bitcoin because obviously we know there are other crypto coins out there. We'll stick with Bitcoin. The idea of a fixed supply, while true from Satoshi's original white paper, which I've read because Tyrone made me do it, but the concept of that fixed supply has already been broken once, and there are protocols in for breaking it again. So that hard fork from original Bitcoin to Bitcoin Cash was one such instance. So there is precedence for that being broken. There's nothing that prevents it from being broken again in the future if enough miners get together and decide that this is a change we want to happen. Now, I'm not saying it would be easy because that is not true. The original fork was not easy to do, but they can make it do it if they want to. And that turns around and changes the supply constraint again. The other thing I'd like to sort of, that I'm having trouble reconciling, and Meg may or may not feel this way about it, but this concept of the inflation hedge, that, oh gosh, the Austrian economists are all printing machines going brrr with cash or anything like that, even though we know it's just key pushes these days. The idea of how that mixes with modern monetary theory of where the inflation is occurring and where the problem occurs. Is it not the money supply, but the resources in the economy? So if I know that the supply of Bitcoin in and of itself is not necessarily fixed, it is probably so, but not guaranteed to be so. How do I reconcile that with this whole concept of, oh, there will only ever be 21 million of them, because I already know that that's potentially not true?
Well, Adam, I'd love for you to take the first one there about the 21 million cap, and then I'd love to touch on the inflation piece and MMT as well.
Sure. So the cap, of course, is part of the code.
Right.
Now, as you mentioned, Ronnie, the code can be changed. So enough of the developers and then the miners can vote on, changing the cap, and you can go, okay, when Bitcoin gets to $1 million each, they can just decide to print, 100 million more Bitcoin if they want, right? They can decide to speed it up. They can decide we're going to have block rewards go on forever, whatever it might be. Now, the problem with that is the incentive mechanism is such that if they did that, the value would immediately drop significantly. So again, it's all about the incentive structure. The incentive structure is not there to continue to create more than that Bitcoin. The incentive structure is there to say, okay, those of us that are miners and those of us and those that are guarding the code, that are keeping the code up, there's no incentive for them to create more Bitcoin, because once they do that, the price will drop significantly, or it'll drop in proportion with the amount that they try to create. In terms of if you want to get the technicals of the Bitcoin Cash, the hard fork, and other hard forks, other forks there have been at Bitcoin, which means that they have decided they needed to have an offshoot of the Bitcoin code in order to fulfill some other need. So in the case of Bitcoin Cash, it was, we need faster transactions. We need more transactions. We need to buy the proverbial cup of coffee with our Bitcoin. So we need to change the code. So everyone, as of this date and time, or this block, who owns Bitcoin now also owns Bitcoin Cash, right? That didn't create more Bitcoin. It created another cryptocurrency that had different functions and different code to it from that point on. Bitcoin has still remained Bitcoin. Now you can go, all right, well, we can just create another fork that is Bitcoin 2 and Bitcoin 3 and Bitcoin 4. And therefore you're just creating more and more of these cryptocurrencies. And when are you going to start eating into basically cannibalizing the value of Bitcoin at that point, right? And that's probably more the argument is that there's a market for the value of cryptocurrency. And if you start pumping more and more and more of those out there, do you cannibalize the Bitcoin value? And that's kind of the question. The answer is yes. Technically, you could create more Bitcoin. The miners could decide to do that because the code says that they can. The code is written in a way that they can do that. The question is, from the incentive mechanisms, would they, and do you think that's likely? Just like if the price of gold goes from wherever it is today to $10,000 an ounce, you better believe that everyone and their mother is going to get out a pickaxe and start trying to find gold. And there will be more gold in the world, which will inherently bring the value of gold down. Right. So it's all a matter of incentives and what we feel like is going to happen. And so when you think of it from an investment perspective for you or for your clients, it's, what do I think will probably happen? And as Steve alluded to, what is the infrastructure that's underpinning it now? And where do I see, as I said, Meg, where do I see demand going versus what I feel like is a pretty fixed supply? It's not, you're right, Ronnie, it is definitely not 100% fixed at 21 million. It is just relatively fixed based on the incentive structure that is
absolutely
in place.
Yeah, it's just a matter of, when they did the original fork for Bitcoin Cash, up to that point, well, a little bit prior to that, obviously, but it was, okay, well, this is what we're with, and this is all we'll ever add. But enough links fell in the chain that says, okay, it's obvious we do need to make a change here, so we're going to do it. And the incentives finally stacked up enough for them to do that.
Exactly. And
we, of course, have no way of knowing if it'll do that again in 3 years, where something else will come up, some other mechanism they want to enable speedier transactions.
They could create Bitcoin dollar, and they make sure every one of them is exactly worth $1 or something.
Exactly.
But the important point is that you understand that, and you can have those conversations with clients, and you can make that determination of, look, I don't feel like it has as much value as we think it. I don't think it'll get to that $500,000, $250,000 level. And here's why: because I think, based on the incentive mechanism, when it gets there, they'll figure out some way to increase, or they'll figure out some way to throw out some other cryptocurrency that'll cannibalize a little bit. And therefore you either go, look, this isn't a good investment, or once your Bitcoin client gets to 150, we're getting out. That's the plan.
Yeah, I think one other thing to keep in mind, the way I look at this too, is this idea of network effects. And so we did have that hard fork a few years ago. And if you look at the coin that came out of that hard fork, I think it's selling for roughly $500, let's say. So it's 1/100th of what the original Bitcoin is. And so I think the consensus is that the original Bitcoin, not the fork, is the one that people are viewing as the original, and maybe I'm using the wrong language here, but kind of the true Bitcoin. And the marketplace has voted, and they said this is the one that we think is the one, and it's got the network effects, it's got the energy behind it in terms of the miners and the developers and the money that's going into building out the infrastructure around it. So I personally am not concerned about that 21 million cap being increased in my lifetime. Of course, anything can happen, but does that make sense, Ronnie? Is that it?
Oh, that I understand it.
Yeah.
The trick is being able to say to a client or anybody, I mean, like being able to say, oh no, there'll only ever be this many. It's like, yeah,
I don't think,
that's really only it'll happen because it's only been around for 2009.
Yeah.
And it's already changed once. So it's not necessarily that it'll never be more than 21 million. And it's not to say that something else, some variant like Bitcoin Cash or some future, to be announced thing might end up being better because of the way the software, the code will change over time. I mean, one of the complaints about Bitcoin is the actual speed of the transaction as the number of nodes increases and how far the transaction has to propagate before it's considered legit and everything else increases, then it's not as fast as it used to be. And that the code, it was hard coded for the transaction fees to be 0.01 of a Bitcoin every time. It was hard coded to do that. So other things have been layered on top of it, like the Lightning system and everything else, to say, oh well, no, we can do this cheaper, faster, better, and then work it into the regular Bitcoin blockchain later on. And it starts to get confusing and ugly really quickly. To explain that to a client and why it is or isn't a good idea. I mean, any number of options that go there. But once we get beyond the original Satoshi model, which was a very simple, elegant thing, and we start layering other things on top of it to fix things about it, other features that we want or things that it turns out the code didn't scale very well, that kind of thing. We start introducing all these extra variables to the equation, and it becomes a messy situation to explain to a client why they should or shouldn't, or how they should be, at least be skeptical is not the word I really want to use, but don't assume it's a panacea that this solves, like you see on Twitter, Bitcoin solves this. It's not the answer for absolutely everything, especially as we layer on extra features.
Yeah, and I would say that of all the cryptos that are out there, the original Bitcoin seems to be the one that has essentially changed the least. And I think that's why we had the Ethereum blockchain was created, because there was concern that the Bitcoin blockchain didn't have the ability to have smart contracts and make all these different changes to it. And so they said, well, we can create a better Bitcoin. So we've got all these different blockchains out there. And that's one of the things I do like about Bitcoin, is that I think for the most part, it's stayed true to its original design. And if you think about that, the purpose, it's not trying to be all things to all people. And I think at this stage of the evolution of Bitcoin, it's really becoming a store of value. And yes, it's super volatile, but it's still an emerging asset. And so it's about what, 10% of the value of gold at this point. And we know gold is still volatile, even though gold, the total market cap or capitalization of gold is about 10 trillion, Bitcoin's about 1 trillion. And yet gold is still pretty volatile. And most people, I think, would consider that a store of value. over thousands of years. So it's still evolving for sure. And Meg, any comments on this thread here?
Sort of a meta comment almost, which is it's not quite word salad to me, but it's definitely on the word salad end of the spectrum. And I saw that a lot in the Twitter threads that, Bitcoin enthusiasts come in and they just start jabbering. And I have to tell them, I have no idea what you are saying. Clearly English words, but the collection of them and the ordering, gibberish to me.
Yeah. They're not always English.
Okay.
But it's Charlie Brown's teacher all over again. Wah, 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 wah. Yeah.
Well, even if I give them the benefit of the doubt that what they're saying actually does mean something, and I simply am incapable of understanding it, if I continue to come back to my role as an advisor who, among other roles with my clients, I'm supposed to advise them on investments, I realize that this is an entirely new paradigm. I mean, I've been steeped just sort of in the general culture, my particular family history, and now my sort of professional existence for the last, over 10 years. I've been steeped in stocks and bonds and cash and the custodians like Schwab and TD Ameritrade. And that's just sort of that's my lingua franca, right? That is the water I swim in. I understand that at some sort of visceral level almost at this point. And so now I am, effectively being asked to understand this entirely new thing, which yes, there's overlap, but there are large parts of this Bitcoin thing that are just entirely new. You have to think about it in an entirely new way. And that is where my brain is struggling right now. And one last thing on that is, Adam, I know that you have been quite explicit about, hey, that's why, my company tries to produce content in like small English words that make sense in the order they're given. We do, because I think one of the disservices that the Bitcoin enthusiasts do out there is they don't break it down for people who are like, I consider myself a fairly smart person. I know a fair bit about money stuff. And if I can't understand what you are saying, I don't know if that's my fault. I think that might be a communication issue on your side. And if you for like a generic want to see Bitcoin be a broader cultural, financial industry phenomenon, you are going to need to learn how to communicate in a way that people will understand. Because I don't think that is happening enough right now, just judging from my own struggles to understand the basics.
Well, I think that's a great plug for Adam's business.
Not affiliated.
Well, we're going to set up that affiliate fee here, Adam.
Yeah.
So
and Meg, a lot of what you said is true, and that frustrates me because yes, when someone, especially a financial advisor, types the word Bitcoin in Twitter, then everyone just descends on it, and you hear things like, if your advisor doesn't advise you on Bitcoin, you should fire them and all these things. But you talked about behavior, you've talked about custody, we talk about being fiduciaries, and we, as much as I enjoy cryptocurrency and you don't even want to get into DeFi with me, because we will be here all day if you want me to talk about that, because I think it's amazing. But there's still, as a financial advisor, you have this fiduciary obligation to your clients, right? And you need to make sure that you understand what they're doing, and that what they're doing is being kept safe, right? And there's a reason why banks have existed and custodians have existed and governments have existed. It's because we want to keep people's money pretty safe. And if we just let everything go to decentralization right now, it will be just absolute chaos, in my opinion. Like, we just cannot do that. And so as the financial advisor, you want to understand enough that you go, I can decide if this is a decent investment for my clients. What is the risk here? How do I keep it safe for them? How do I advise them on it? What do I know enough about it to say, when I see some bit of news, is that going to affect the demand on a positive or negative note? And therefore, do I think it will affect the price? That's really what it comes down to. Do I know enough to say X bit of news affects the price positively or negatively or not at all? Right. And so if my client calls and says, what's happening? You know, Bitcoin went up 8% yesterday. What happened? And you go, oh, Elon Musk said he's buying it for Tesla. That's why it went up, because some guy who is the richest man in the world decided he's buying it for his company, and therefore others might follow on. And you can have those conversations with the clients to say, I understand why it might have value based on these supply and demand. And then you can also discern based on who's giving you the information, based on who's yelling at you on Twitter, does this person have a vested interest in the price going up? And are they trying to get my clients to buy it because then their Bitcoin goes up in value? Or are they actually trying to give me information about how it works? And you as the advisor need to be that intermediary, as you well know. I don't have to tell you what to do as an advisor, right? But you already know that. What's the behavior of my clients? And therefore, if I understand what Bitcoin is and eventually crypto and DeFi, and I want to help my clients get into it at all or help them with it, I need to understand what their behaviors are as well, and how I help with that in terms of potentially making this an investment, and you have to decide also, Meg and Ronnie, of course, how much do I want to go down the rabbit hole of learning this? I mean, how much do you know about electric cars to be able to potentially put your clients in something that invests in Tesla? And how much do you have to know about smartphones to invest in Apple, right? So if you just go, look, I understand the supply and demand, and here's the infrastructure that's behind Bitcoin, I think, yeah, it's an okay investment for you. Or based on your risk profile, or based on your behavior, based on the fact that you're 82 years old and you can't afford to lose this money, no, it doesn't work for you, right? And that's kind of where we are. So I apologize that everyone in the Bitcoin community comes down on you every time you say the word. And the important thing is to go, I'm gonna understand it enough to know who's giving me good information and who's not, and when just to not tweet out that word.
Yeah, and I just want to add to what you said there, Adam, because I think this is really important. I want to thank Meg and I want to thank Ronnie, because I think you two are exemplary of the best of being a financial advisor. And what I mean by that is you're taking the time to try and figure this out. You know, we're spending an hour here having this conversation, we're tweeting back and forth, and you're really trying to figure this out because you want to understand, hey, is this the next big thing? And I need to be on board with it. So you're taking the time to do your due diligence. And I think that's what a great financial advisor does, is when something new comes along, you're going to devote a little bit of time to taking a look at it. And I think Bitcoin is at the point where most financial advisors should be spending some time doing some due diligence on it, because it does have the potential. I'm not saying it's going to be. It has the potential to be very transformative, and not just Bitcoin itself, but as Adam talked about, you know, decentralized finance and all these different blockchains. I mean, I personally think that the entire infrastructure of our financial system is being remade because of technology, and Bitcoin is a part of it. And you know, DeFi is a part of it. I mean, just the whole back office is being changed. And so I think it's important that we take the time to understand it. And I appreciate both of you doing that. Even if it turns out you decide this is not for my clients, that's totally fine. But just the fact that you're investing your time in doing the research, I think is a great service for your clients.
Well, that whole conversation on DeFi and
NBA Top Shots.
Boy, that's an entirely different show, because I would love to have a chance to grill some people on that one, because that's got me befuddled more so than even crypto does. But one of the things that Tyrone and I fight about, I mean, I love him, but is as an advisor, as Adam said a little while ago, there's a level of detail to get down into that hole that I'm willing to go to. And then there's a level at which it becomes, I do not care. You know, how below this particular level of detail, how the sausage is made is no longer relevant to me. I don't know how Tesla's battery technology works in detail, and I do not care. I understand how a battery works, and that's really all I need to know about how the car then proceeds to power itself and go down the road. From a crypto perspective, there are several besides Bitcoin that are prominent. Bitcoin obviously is the most prominent, but Ethereum has its uses, and There are a couple of others out there that have some specific use cases. I mean, Ethereum is much more useful in that DeFi setup because of the way the coin was designed with smart contracts and everything else. So where we go with that's a different discussion. But as an advisor, the one thing that I have needled Tyrone and Pierre Rochard Morgan about is I want my Vanguard crypto index ETF at 0.05 expense ratio, no minimum investment requirement, and I don't have to be an accredited investor to get into it. Kind of like the Bitwise fund exists, but in a mass market retail availability, because I want to be able to advise a client, say, this is it easy enough to think about it as a currency. Like you used to be a currency trader in the Deutschmark and everything else. Think of it as a currency, and this is what we're going to invest in. So you can write it as an investment, but you don't have to worry or get into the weeds about, do I have to get a hardware wallet, and do I need multi-sig, and who do I put it with, and do I spread it across multiple custodians or exchanges? It becomes a to try and deal with. And of course, you can't get into those things easily in accounts that your average middle income or upper middle class income tech worker can invest in, because there isn't an ETF in their 401k they can put some of that allocation to. How they get to the coin is still more complicated than it ought to be. Now we've got movements going forward to fix that, but it's not soup yet. So as an advisor, do I tell them, okay, go get yourself a Coinbase account or a BlockFi account, all these different possible solutions? How do I advise them on it? Well, then I suddenly have to become almost push out all the information on everything else that Meg was talking about a moment ago, all the rest of the water that we swim in and are very familiar with. We know where the deep ends are, and there are parts of that pool that are already complicated enough to get into the crypto side of things, to be able to accurately advise our clients what to do, what not to do, beware of this part and that kind of thing. So how do we get to the point, or is it just a wait and see thing of now it becomes an instrument that is explainable to a client, that they can invest in and get out of relatively simply, like they can do pretty much everything else they do now?
Yeah, I think
Crypto's
that's
not there yet, as far as I can see.
Yeah, it's coming. It's coming for sure. And we're going to have an ETF, a Bitcoin ETF at some point. Schwab is now talking about how they can custody Bitcoin. So it's definitely on its way. I think Fidelity has been a crypto custodian for years. And so they're very much behind it. So yeah, again, this is an emerging technology, and there's a lot of money that's being put into the industry. And so you're definitely going to see that infrastructure built out. So I know we've just got a few more minutes. I want to make sure, Meg and Ronnie, if you guys had any specific questions while we've got Adam here as our subject matter expert. And again, we're not here to convince anybody. This is just to have an open discussion about what's going on. What are your questions? And we're all going through this together. We're all learning this together. So Meg, any other thoughts, comments, questions on your end?
Oh, well, I will maintain my position at the very beginning 101 level of Bitcoin and general crypto understanding. So, this question's probably already been answered in that Twitter thread, but my big question is, where do I go for that 101 education? I mean, this conversation's been interesting and worthwhile and revelatory of, good Lord, I know almost nothing about this, because they're saying all these things that I barely understand. So I need that 101 to even be able to figure out where I want to go next. And it might be Adam's company, again, unaffiliated, but it's hard to discern that, because even I thought, I'll listen to some podcasts about crypto, about Bitcoin, and they just jump right into the deep end, and I'm left flailing, holding on to the side, going, huh?
So is your question about how does Bitcoin work, or is it, what is the history behind Bitcoin?
I don't even know the questions to ask, Steve.
Okay.
I really don't. The paradigm is new enough but I want to learn information that is relevant to me as an advisor. That is my primary concern.
Mhm.
Where's the crypto advisor, crypto RIA advisor 101?
There you go. Adam's raising his hand.
Yeah.
So Adam, let's make sure we get your website out there. So for people that do want to learn more about this,
We
what's the best way?
Interestingly, we have a certification program and course called Certified Digital Asset Advisor. The website is certifieddigital.org. And we have our second cohort. And the reason, Meg and Ronnie, we do it as a cohort class is we have on-demand content, which is here, technical. Here's some videos we recorded that teach you about Bitcoin, how it works. The live events, which by the way is going on right now, which my partners are taking over, is so that we can answer the questions and we can have conversations. Let's talk about what some of your clients are asking you. Let's talk about some of the news that just happened. And we get on the whiteboard and we say, we're going to go through the role play of what happens when a client walks in the door. And we want to make it really important, like a very important distinction here is we don't ever push you to push Bitcoin or push crypto on the clients. But as you stated early on, Meg, you have clients, especially working in the tech field, that already have it, are already interested. And as an advisor, it's kind of incumbent on you to at least be able to say, I can help you out, or I can at least have the conversation with you rather than just shutting you down or making you go do it all on your own. So what can I do as an advisor to at least help you along that? And one of the guys that's taking our course right now said, look, my RIA doesn't let me do it right now. Doesn't let me, advise on it. They don't let me advise on private real estate either, but I have to know enough about it that if my client wants to invest in it, I got to know where it fits in their portfolio, and we have to be able to talk about it. So that's kind of the goal is we need you to be able to have the conversations about it. And then it's up to you if you want to go farther, right? But have the conversations, understand custody, safety, security, and understand, a bit about the investment theses and all that. And then you can decide if you want to go way down with me to DeFi, which Ronnie, I would love to have that conversation with you. But
we have a podcast on that.
Yeah, we can do another one. I can talk DeFi all day long.
I just listened to those before this, as you suggested, and I'm like, wait. Let me
Yeah.
talk.
Good.
Exactly.
Yeah.
So, like the answer is, and there are a few others that have created this specifically for advisors because we are advisors. We know, I'm a CFP. We know what you have to go through from a behavior and a client perspective. And whether or not this is the next big thing doesn't really matter. If your clients are interested in it and there's the opportunity for them to invest, or maybe they already have, it's kind of your job to at least say, I need to know I need to know something about it and where it might fit. And if it makes sense for you, whether your kid told you about it or not, doesn't matter. We need to figure out if it makes sense for you and your portfolio, and that's your job. And that's where we come at it from the education standpoint of not cramming it down your throat. You got to get your clients involved, but if they're asking, let's talk about it. Let's figure out what conversations you're going to have next.
Ronnie, any final thought, comment, question from you?
I really like Adam's answer there. As an advice only, I don't do custody or anything else like that. I don't open accounts or anything. As an advice only advisor, it's a little easier for me in the sense that, personally, I'm digging more into it and trying to learn more about it. But it's easy enough for me to say, to a client that's already got it or already sort of dabbling in it, to say, look, great, it's a highly speculative, highly volatile asset class. If you want to play in it, knock yourself out. That's great, but don't go above 5% of your total portfolio. Play with it. Don't bet your retirement on it, at least not yet. It's not, as I said earlier, it's not soup yet. So it's an interesting asset class. It is very speculative. It is very volatile. If you've got the stomach to ride it out, great. And you want to throw some of your money into it, that's great. Grab any number of these other apps, Coinbase, Cash App, any possibility you want to get in there with it and buy into it, that's fine. Limit your exposure. Because I guarantee you that if I have, my niche is engineers and scientists. If I've got one of my previous employers, a telecom engineer, says, man, this is cool, I'm going to put everything into it. And I tell him, ask your wife how she feels about that. you will get a very, very different answer. So I suggest you don't do that. Maybe stick with the 5, at most 10% if you're young and you've got a long time horizon. Don't worry about it. But to be, all in and, have fun being poor and everything else kinds of stuff, no, can't do it. But I'm happy to say, if you want to, like I said, take a small percentage of allocation, play with it, learn, and enjoy the ride up. As long as you can stand the ride down, go for it.
And have a plan, right? If it's, look, Bitcoin gets to 150, what are you going to do? Because then it's going to be a bigger part. Are you going to sell some? And if so, just stick to your plan.
Rebalance it like everything else we do.
Exactly. And that's what Arthur Salzer was saying on the podcast I did with him, a Canadian financial advisor who does have a decent allocation to Bitcoin for his clients, but he actively trims back. So if it goes up, he trims it back to the target allocation. If it goes down, he might buy more to get it back up to the target allocation. So he definitely is actively managing the Bitcoin portion of his portfolio.
Yeah, I just treat it as a held away asset, even though I don't have custody at all, but just treat it like that mentally and say, okay, you'll go, put some percentage of there in there as long as you're comfortable with it and play, go for it.
Yeah. Meg, anything else? And we'll wrap up here.
No.
All right, great. Well, I want to thank Ronnie, thank Meg, thank Adam for taking some time to be on the show today. And we'll have some show notes. I'll link to Adam's course, and also we'll put some other links out there for some other resources that have been well vetted in terms of learning more about Bitcoin and maybe crypto in general as well. So you can go to stevesandusky.com and check all that out. So again, thank you all for being on the program today.
Thank you very much, Steve.